everyone. I'm Rick Bensignor. Today is Tuesday, November 24th, and this is this week's In the Know Trader Show. Well, as we record late Tuesday morning, the market, meaning the equity markets, are flying. The S&P is up 47 points. That's about 1.33%. NASDAQ comp up almost 1%. And the Russell 2000 is the leader here, up 1.66%. We've got crude oil over $45 a barrel for the first time in probably since March. And the 10-year, U.S. 10-year is up 2 basis points today at 8.8%. And gold taking a dive for the second day in a row down to just north of 1,800 in the December futures. They've lost, I don't know, about $70, give or take, or so in the last 2 days. So we're seeing some, finally the metals get a decent sell-off and probably become a source of funds for some other buying that we're seeing going on. All right, as far as taking a look at what's going on today, we're going to start off the trader education portion with the value of leaving resting orders. So we'll talk about that a little bit more. In our markets overview today, we'll take a look at growth versus value because that is certainly something being talked about every day. And we'll look at what the charts say. We'll take a look at the U.S. 10-year and also, very importantly, the yield curve. And I tend to look at the U.S. 30-year versus the U.S. 5-year as the best way of looking at the yield curve. There are, some people look at 10s to 2s, but I think 30s to 5s gives you the best explanation of what's going on. And then we'll take a look at also the energy ETF XLE just to see what's been going on there for the last couple of weeks. When we look at a sector today, we're going to look at a space that we've never looked at before, and that's cannabis stocks. And we're going to do so because they're finally moving up after having gotten decimated a couple of years back and kind of just sitting at very low prices for quite some time. And the recent weeks, they've started moving higher. So we'll actually take a look at, 10, 12 names or so here that I've picked out. So we will do that as a first time kind of sub-industry look. But the way they are trading now, they seem to be short-term on fire to the upside. And of course, many states have now legalized pot, and I think that trend will continue over time. So we'll take a look at those charts. So that's what we have on tap for today. As always, in order to reach me by email, it's rick@intheknowtrader.com to sign up and get more information about our weekly tactical trader report, which, by the way, went long. Marijuana stocks through an ETF a little over a month ago, I think it was. So we got in at the perfect time and are now up, I guess anywhere from 30 to 40% or so, something like that. And that's the weekly tactical trader report that comes out Wednesdays, or to get the 7-11 monthly Spider Sector ETF report, which the intent is to beat the S&P over time by being in no more than 7 of 11 of the macro Spider ETFs. Go to intheknowtrader.com to sign up. All right, so let's talk about the value of leaving resting orders. This is something that I've talked about before. Some people will and often do disagree with me and say that, if you get into a stock and you have a target, when you get the target, evaluate, see if you should sell, and stick with it if it looks like it's going higher. And I'll argue with you that greed will usually get the best of you when you hit a target because the market has moved up as you expected it to, and you'll say, the stock market's moving higher, I think this can move higher, and you won't take your profits where you intended to. And I'd say generally that will cost you money over time. So let's take a look at just some examples, both in leaving resting orders to take profits, but also leaving resting orders, let's say bids underneath the market, that should a stock or an ETF that you've been kind of following sell down to a level, that you think would be a good place to enter, instead of being glued to your screen day after day and trying to watch everything, if you've got ideas that you think you want to play, then I often will leave resting orders underneath the market. Sometimes they get hit, and sometimes not. In a really strong bull market, a lot of times the stocks don't sell off enough to get to where I'd ideally want to get in. But again, I'm following so many different stocks and markets at the same time that I just simply can't keep track of everything. So I like to leave resting orders. And I'll give you a couple of examples of some things that I've done recently. Where do I have it? Oh, maybe I don't have it. Let's see. All right, so I'll just pick something like Pfizer. After the bottom was made in March, and then we peaked on a 13 also. So notice the bottom was made on a 13. The top in 2020 was made on a 13, right? Upside exhaustion, downside exhaustion, upside exhaustion. I left an order in, hoping to get filled at the TDST line, which started this trend higher at right near $32. So I had an order in. The TDST line is at 31.75. I was bidding, I think, 32.25. Anything near there, I left as an open order. And eventually, early in the summer, I got hit, and it got filled within 1 day. I think I got filled the day before the low was made. No, actually, it looks like 2 days before the low was made. And then, of course, you get a notification that you bought something. And sometimes I don't even remember, which is the point of why I do this. I can't follow everything, but I knew the price I'd be willing to buy Pfizer virtually in any circumstance, with the belief that the March lows were going to stay the lows. And that's something we told you by April, that we thought the March low would stay the low for the rest of the year. So I knew if I got a pullback to the TDST line, essentially the trend that's the beginning of the trend that started this up move, I'd want to be a buyer there. So I had a resting bid here, I get filled, and then quickly it turns, up to the upside, actually gets a 13.9, and I didn't do anything at the time. I probably should have, but I didn't. Ends up getting another 13 exhaustion bottom, and then the news came out, and so on. So this is one that I actually forgot myself to put in orders on the other side, because between the stop out level here for the 13 at 41 and the propulsion exhaustion level up in here, it's probably 41ish would have been a good place to leave a resting sell order, and I didn't do it. And now I'm living with only being up $4 when I was up more than another 5 from here, and that's my own mistake. But this is a good example of leaving a resting order to get where I wanted to get in, then seeing what the market does, and leaving resting orders to get out. It doesn't mean I have to sell 100% at these targets, but I certainly am generally going to sell at least half, if not more than half, at the targets that I initially set. Something like here, we spoke about this on the show a couple months ago, I think it was, Chevron. I told you I was doing bottom fishing at 75-ish. And I was leaning on this weekly TDST line, same thing. If the March low was not going to be taken out, and even as horrific as energy names were, I was pretty sure that wasn't going to happen, that I was willing to buy a pullback at 75. And I paid about 75.25. And yeah, I had to watch, a nasty month, but now you see what's come the other way. And since I got in at 75, I had resting orders to sell at 91. Which I got filled on yesterday. This is a weekly chart. So today we're $2 or $3 above where I sold half. And I'm very content to live with that. I made 20% roughly on this trade. I'm still long. I can see bigger long-term targets potentially back up here. I can always add back more in if we pull back, or if I just decide that I think there's enough strength here that we're going to keep going. But once I got in and the market turned around, I set a target at 91 for myself. And yesterday, I get a notification, I sold half my shares there, and I'm all good on something like that. The last one we'll take a look at is and we'll actually look at this name when we get to the pot stocks, but not long ago, I think it was just 2 weeks ago. So I've got all these signals that, we're probably putting in a base here into this Aurora Cannabis. And this thing keeps getting downgraded. In fact, in the month of November, I think there have been 3 more downgrades. And I saw the propulsion exhaustion level was 649. And to me, I think pot, and I'll tell you something, I'm turning 62 in 2 weeks, or a week and a half from now. I have never smoked pot in my life, so I can't tell you that there's anything about pot that I do. I've never bought a tobacco stock. I generally wouldn't buy these either, but I'm just playing the market, not because I have any interest in owning the company per se. It's just, it's something I saw. I've seen downgrades into something I think has bottomed. And I had a 652 bid. And so I got long within 3 cents of the low of the move. And now we're trading 866. So I'm up, $2.40. Percentage terms, it's good. This looks like there's a chance, for, this was a big down candle, doji potential good up candle. It didn't come after a large up move or a large down move. So I'm not really going to call this a potential morning star, but I like the idea of what I'm seeing in this area. So that's why I bid. And I could probably leave a resting order at 15 and change and 20 and change to sell small pieces of it. If I think there's a bigger, longer term bottom, then I may leave resting orders here near 38. And I'm going to do that simply because, again, I can't watch everything, but this number is not going to change. For a long time, this target's going to stay on the chart at 38. So again, just an example of why in certain people who, if you don't want to stare at your screen all day long and have a portfolio that has dozens of different securities in it, it's very hard to track everything constantly in real time and then make the decisions that you want to. So if right now you ask me if I paid $6.50, would I be happy to sell sometime in the future Aurora at 38? The answer is yes. And that doesn't mean you can't go to 72 at some point, but I have no idea. All I can tell you is if we hit certain levels, I'm going to lighten up some exposure automatically, regardless of what's happening at the time. And that's why I spent the time I did this morning to talk to you about this, because I think it's a valuable lesson to learn that when you hit your targets, you play those things and you take the emotions out of it, and you don't hem and haw, should I, shouldn't I? Well, what happens if it goes higher, then I sold too soon? Yeah, well, the worst thing in life is not selling too soon of something that you have a profit in. So that is today's talk on that. Let's move to taking a look at what's going on in some of the markets. So let's get back to our PowerPoint. And let's start off here taking a look week over week of the sector changes of the 11 spider sectors. 1, 2, 3, 4, 5 outpaced the S&P by more than 1% last week. The biggest winner was energy. So after a few weeks ago being down something close to, 55, 58% versus the S&P this year, it's now only down 45%. So you're still getting absolutely crushed if you're in energy names versus the market. But it's a lot better than it was a few weeks ago. So it was actually the biggest winner this past week because it picked up about 400 basis points or so. We also see consumer discretionary added a couple of percent, and industrials did, and materials did. So some of the cyclical, you're seeing the cyclicals kind of here, mostly in the middle, do well. Utilities, which had done well recently, got rocked for over, about 350 basis points of underperformance last week. So they were the worst performers. So only 2 underperformed last week. But utilities, which, surprised a lot of people that have done so well, all of a sudden took a hit. And, or one of the, 1, 2, 3, 4, 5, 6, 7 of the sectors that are down this year, they are the 4th worst performer on the year to the S&P. Tech, had been up over 30% versus the S&P. Now it's up only, well, in round numbers, 20%. So obviously it's giving back a fair amount of outperformance, but it is still the best performer of the year. So if you've been in tech, it still has been the best place to be. And don't kick yourself that it gave back 1,000 points of outperformance. That's part of the rotations in the market, but you're still long if you're long tech. The best place to be in the market. Consumer discretionary, second place. Of course, financials, the second worst performance this year. So many people did not anticipate that. It is an overowned group, and that is part of the reason that they've had trouble rallying. Recently, they've actually done well in the last couple of weeks as rates moved higher. But we're going to talk about that in a second, too, as we look at some of the charts that make up the market. Sorry, took a quick break for a quick little cough. All right, so now let's get back to charts. All right, so let's take a look at growth versus value. I'm going to start off on a monthly chart because we looked at this recently and we said we could identify with a huge up move that you saw in late 19 and 20. And just how overbought this was. The monthly 9 count gave us a clue that it was probably over, either to go sideways or pull back in. You can see there's a sharp movement in favor of value. So this is growth over value. So when the market, when the price here goes down, that means value is outperforming. So you are seeing a pullback. First support is kind of just beneath where we're seeing now on a long-term basis. 0.4760 is the price of growth divided by the price of value. So first support would be in here. Secondary support, I'd say down near 44.5 or so. And when I say 44.5, this is a fraction. It's 0.4453. Again, the price of IVW divided by the price of IVE. If we cut this to a weekly chart, we're seeing that on the weekly chart, we've already hit in the time frame of a weekly, let's call it medium term time frame instead of longer term, we've already sold off to a support level. And so this is going to make it harder for me to first jump after value right now. I want to see if this bounces, and if it bounces, whether or not it can get back above the conversion line, which basically this climbed up. On a bigger decline, this says 44.5. No, actually, sorry, that's not a TDST line. That's an old stop out. So I'd say when it comes down to the cloud, you start looking for some support again. And the most important thing now is to see what happens when this rallies, whether or not it gets contained somewhere in here from the conversion line. All right, let's look at the US 10-year. Here's a daily chart of the 10-year. You know that we got bullish the yield chart right here on October 7th, looking for 94 basis points. We got our target, same type thing. I don't want to start, if here's the chart in real time, and let's say I take sequential out of the picture, and let's take combo. Let's see, that's aggressive combo, I think. Yep. All right, so here's, let's say, was the chart. Well, sure, I can see him up against resistance, but I might say, everyone on TV is talking about it. If this thing breaks out above 1%, it can go to 1.25. I'm going to wait and see. And you wait and see, and all of a sudden, a week later, you've given back 15 basis points or so. That's the problem with not taking when you hit targets. At what point are you going to, certainly this day is the earliest day you're going to say, oops, something's wrong. So maybe you got out at 88 basis points. If you just said, okay, that's no good. But then you might say, let's see if the gap holds. And here we fill the gap, we're coming up. This is why when I hit my levels, I take my profits. If it breaks out to the upside, I can always get back in. I want to see now if the trend line, this green trend line, is this going to hold on a pullback, etc. So that's the 10-year. And to me, when I look at this, we are still in this large trading range, which I've highlighted by this pink shaded area. We got to virtually the same top that we got to in June. And there's nothing to suggest that anything's going to change there until we get more of a breakout towards the upside. Excuse me. So I am flat this right now and doing nothing in the US 10-year. Let's go to, I'm going to go back to the PowerPoint because in here I've embedded the chart of the US 30-year to the US 5-year. And again, this is the ratio I look at for the yield curve. And what I've noticed in the last couple weeks is that, first of all, we broke out from this downtrend line at 1.2. It stopped at 1.27, so we missed the Fibonacci 38% retracement of this whole move from late 2010 to the lows in 2018 and pulled back down. And pulling back down, we took out this trend line on last week's big decline down to 1.15. We took out even this trend line that goes back to the early part of 2020, whereas this pink one here is only back to August. So now we've broken both of the trend lines, got to 115. We broke out above 120. I am right now completely neutral after having been bullish. Last week's move says to me, I'm not convinced the yield curve is going to keep moving higher. So I'll look to buy it lower perhaps, but right now I think there's no particular bias here. And last week's move from 127 down to 115, well, in 2 weeks we did that. So in 2 weeks we fell 12 basis points on what was supposedly a breakout in the yield curve. I told my institutional clients I am completely neutral this right now with no particular bias. Let's go back to our charts. Let's look at the energy ETF, XLE. And here's the weekly, and same type thing. This TDST line was played with for a month and a half. Never got a proper break, even though we broke beneath it. But understanding the rules of how you break a certain level. So if you had bought this somewhere near 30-ish, you probably had a 10%. Yep, you had a full 10% move against you, but now you've gone from 30 to 40, so you have a 33% move with you. And I'm long for myself XOP, and I'm long Chevron. And that's pretty much only my exposure on the energy side. But they've done very well. And after the type decimation this has had, I bottom fish and I've kind of gotten some exposure into these levels and doing well on the bounce. So energy looks like to me, this should, I could draw probably, no, that line's already broken. I'm guessing this can still have some strength and get up towards, the upper 40s. So it still may have another 25% to go. There's a small unfilled gap in here. So if this gave you a chance to get long under, a little under 30, between 35 and 34 something, I'd probably do it, again, with the assumption that this is in the process of doing some type of bottoming. But, look longer term, and I'll just put up kind of a rough, somewhere where this purple trend, I'll change the color just so. Let's make this brownish. So this line in here, somewhere near 55, clearly is where, a bigger breakdown came from. So I wouldn't expect it to get much beyond there, but that still leaves room. So yeah, this is, energy, I think, has finally turned the corner. And at some point, some of the strength is going to disappear, and maybe it gives you the chance to buy. There's even a little gap this week from last week's close to this week's open. So even in there, you could possibly do a little penny. All right, so that's the markets overview. Obviously, I think the Dow today touched an all-time high. We are at, we're over 30,000. It's up 442 right now. So all-time high for the stock market. Let's look at some of these cannabis names and see what we see. I'm going to start with let's just go back to ACW. Let's go to MJ. This is kind of an ETF for the space. So for in the no trader clients, we got long this back in here somewhere. I don't remember exactly. I think early October, maybe right near the 9 count. I don't remember the exact entry price, but We hit our first target of 1365. We took half off when we got there. And now it's trading over 14, getting a good lift now. So we still have half on. We made at least 20% on the half we held, and we probably up another, we're probably at 40. So average, we're up 30% in just over a month, having been able to identify the double bottom with the 13s that accompanied it, and why, we got long basically what nobody else wanted to touch. Other upside targets here, just for based on the weekly chart, is 17.5-ish, followed by 19.5-ish. And those who remember, tactical trading. We're not looking to invest over long term, although sometimes we pick individual names and say, this is worth holding. This may be one of them. The other one that we've had and done spectacularly on is that's really like a long-term hold is the Clean Energy ETF PBW. We got long that, I'll just show you. We got long this in March at $30, a week before the low was made. I was buying against this TDST line for clients, so we had 1 week, or let's call it a month of, holding a small loss, and we've scaled out most of it between 50 and 55, and we still have the last piece on now, and now we have basically a triple, right? We paid 30, it's trading 93, so you're up over 200% on this. So sometimes we'll hold something for that amount of time, but most of the time we're trading, so we're in and out within, multiple weeks to multiple months, but not generally 6 months or more, like this we happen to hold. All right, so MJ we said we like, and if that's a proxy for marijuana stocks, then we start taking a look at, each one individually. So let's try to get through a bunch of these. This is the one I showed you before, Aurora. I like this. I'm long it. I think this heads higher. Tilray, TLRY is another one of the common ones. This got blasted from over $300 along with lots of other hot stocks. Same type of thing, kind of double bottom in and around the 5 area. This one's weaker than the others, well off the recent high, so it's not as good one as some of the other ones are. Let's look at GWPH. Sometimes these are the first times I'm ever going to be looking at them myself. This is GW Pharmaceuticals, same thing, double bottom, 13 on one, 9 on the other, moving higher. This should get up to at least 138 and bigger, up to 161. Those are the upside targets. APHA still heading higher, so trading 671, target at 709, and then well up to $12. You're only on a 3 count, so room to go there. CGC, interesting. This is the only one that we've looked at so far already on a 13 and an 8 count, so I'd say if I'm long this, I'm probably getting out in by next week. There's other better names. Here's one that most people don't realize are part of the group, Scott's Miracle-Gro, which is really, we think of fertilizer and stuff, but they actually have some exposure to the space. 13 on the bottom here, sideways, whole basing pattern for 6 months, starting to move up, still has some upside target rooms higher. So that's a name to consider. Philip Morris, or actually Altria, has some exposure in the space. Also, downside held here, so has some room to the upside, not as much as some of the other ones. And the last one we're going to finish, I think, is Constellation Brands, STZ. So this bottom in March, failed to get a sell signal here against propulsion level. This needs to break out above 210.65 to then ultimately target. Well, first you'll have here at 228-ish and then 254. That's it for this week. Hope you enjoyed the show. I'm Rick Bensignor, and this has been In the Know Trader.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.